Hello traders, welcome back to my channel. This video I'm going to be sharing with you this amazing top-down analysis strategy, which is a price action strategy where you can use your trend lines, you can use patterns, support and resistance to catch hundreds of pips on one single pair, on one single indices, whatever market you are trading. So this is actually an analysis which is a top-down analysis, and we are from here we are forecasting a sell that's going to bring hundreds of pips in one single trade. Guys, you can do it in any market, so you want to watch this video till the end. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Right, so basically this is a top-down analysis on gold, right? So basically we are going to restart the analysis from scratch so that you guys should understand clearly how to analyze, using price action and all of that. So let's look for an analyzed gold. Okay, all right, so it's a top-down analysis. These are bear charts, and after analyzing you are going to see a lot of information from this chart. So to do a top-down analysis, you go to the biggest the bigger time frames. It doesn't matter what time frame you are trading in, the information on the bigger time frames is going to help you to know where to take your profit, where to place your stop loss and all of that. All right, so we start from the daily. All right, so we start from the daily time frame. What you do is you plot out all your zones where you find price reacting from your support, your resistance zones. Okay, so right here, if you look at it left, you are going to see this is a major support zone here. We have the history of price reacting to this zone a couple of times. Okay, so from there we plot it out like that. You can see that once you plot it out like this, once price reacted twice, when price came the third time, price actually got rejected, and that is where price is pulling back from. All right, so if you look at it, we have another zone here. Price has rejected once, twice, right? When you see any form of uniformity, couple of times price has reacted to this zone, and it has acted as support and resistance multiple times. You can see this is a very good zone here too, right? So if you see price got rejected when it broke out, it became resistance. When it broke out, and then it became support and all of that. So you mark out these zones because they are going to help us in a smaller time frame. We are not entering based on these time frames. Anywhere you see key zones like that, you mark them out, right? This is another key zone here. You can see price has reacted to this zone many times, right? This is the daily time frame, guys. It's very important. So once you are done marking the zones that you see, you can drop further to the 4-hour time frame. Right, from the 4-hour time frame, you can actually mark again. Now you can decide to change the color of these daily time frames. You can put them red. You just put something red on it so that whenever you see, you should know exactly which time frame you are marking from, because the bigger the time frame, the stronger the zone. So from the H4 time frame, you can see we now have a bearish bias, and from the H4 time frame we have this zone here which price reacted to, because we actually identify it to be a zone where price has reacted more than once. When price came back the third time, of course price got rejected again. So now you mark out your other zones as well. This is another zone here based on the H4 time frame. This one we can decide to put it, maybe let's use blue. Okay, this is the H4 time frame, so we just mark it out like that, and then we are actually just identifying so that we should know how to take our trades. This is another zone here. Price has reacted many times. Remember, there are zones, so you don't use single lines. There are complete zones on their own. So you can see now that when price comes to get rejected, if you just draw a single line, it's not nice, right? You draw like that, see that that's a pure zone where it has acted as support and resistance, both as support and resistance multiple times. So if you look at it now, you see we have a good bearish bias. Price creating series of lower lows, lower highs, lower lows, lower highs. So from the H4 time frame, if you're a daily trader or you are trade based on the as an intraday, you already know that you want to be looking for sell setups. So if you look at it, we already have uniformity. So you can use your trend line here, because if you look at it, you can see diagonal support, diagonal resistance. You can see diagonal support here, right? So after marking out our zones, right, you can just mark out the zones to ensure that you don't get confused, right? Okay, you can just mark it out like that. That's another zone there. You can see price rejected once, twice, thrice, before it got okay. Now it came back and got rejected. So you pick up your parallel channel. You can use your parallel channel. This is the parallel channel tool here, right? Okay, it's a parallel channel tool where it will mark out on both sides. So you pick from this top, just using the knowledge of trend line, you connect. So you connect like that, right? You see that you have series of touches. Remember, you always try to modify such that you can get as many touches as possible, right? So we have those touches. Once you click, you extend, it's going to automatically plot the other side for you, right? So you see it plots the other side, and you see automatically, you see that there is a uniformity, right? Uniformity, because these things are, they work and they repeat themselves. So you see price rejecting, it's like when price goes up, it get rejected, it comes down, it get rejected, it goes up, it get rejected, it comes down. So looking at it now, we already have an opportunity of a very good sell if you already analyze like this, because one, we have a bearish bias, price in a downtrend. Price has actually moved down and have broken through a support zone and gone back to retest that support zone. We have the same zone around a trend line, right? So probably now we want to be looking for sell setups. Okay, you can go further to smaller time frame. This is the H4. You can go further, maybe to the 2 hours time frame. From the 2 hours time frame, you can see we have the same information that plays out here, right? And then right now you can still go further to smaller time frame. We have marked almost our key zones, right? So you can see mark this is the lowest zone here. This is the lowest low that was created before price pull back to create this high. And mind you have to pay attention to market structure as well, because when price create a lower low, for instance, when price is in a downtrend, you see now that price is creating series of lower lows and lower highs. This is what I mean, right? It pulls up, pulls up, pulls up, pulls up, right? So price has completed these swings right now. And now if you look at our zones, going to the 4 hours time frame, for instance, I'm just adding this so that you should understand something. We have this to be the previous high here. Price created this high, created this down, created this high, and you see this getting low. So at this moment, this is the previous high. We'll consider price to be in a downtrend as long as it has not broken through this high. So price is still in the downtrend. It has not close to, because this is the highest zone that led to this low, right? This is the highest zone that led to this low. Price created a high and it's leading to this low, and here we have a possibility of price creating new lows right down here. Now we want to look for how to enter in smaller time frame. So if you go now to further small time frame like the H1, right, you are going to see patterns. We have patterns here, right? This is a pattern here. You see this uniformity here. We can see a resistance, a diagonal resistance there in form of a pattern. Chart pattern could be like a flag. So if you connect like this, right, it's going to bring out something like that. Okay, so basically right here we have a very good opportunity, right? Let's make sure we get this touch. We have a very good opportunity here, right? There's a possibility now that price from here, if price leaves and then breaks out from here, right, we can get a sell trade. And if you get a sell trade here, we'll be targeting this zone below here, guys. These are a lot of pips. These are a lot of pips here. Or a better entry here, price happens, because as price is consolidating, if price pull back to this high here, right, if it pulls back to this high here, price can move down, right? If you look at it very well here, you're still going to see that we have a key zone here. Look at it, right? That's a key zone. You can see this is a rejection here, this is a rejection here, this is a rejection here, this is a rejection here. So basically we have this to be a key zone, right? So now we have a possibility that if price cliff here, goes back and get rejected here, we are going to enter with a lot of confluences. We have many confluences, right? Number one, we have a diagonal trend line that is coming down from a bigger time frame. We have this upper trend line, which is like the upper part of this the triangle. We also have this to be a diagonal support here, or a diagonal resistance. So if price pulls back here, we are selling, guys. It will make a lot of sense. So we have our stop loss there. We can get a very good swing trade, right? That is how you can analyze, because probably if price react to this zone up here, there is a high probability that if price goes up and reject, there's a high probability that it comes and breaks out from here, right? Comes, test, boom, shoot down, right? Because if you look at the H4 time frame, we still have the impulsive move that is still to complete out. So price has just moved down and it is gathering momentum to take the next shot. So that was just what we are going to look as a confirmation. So from there, you can look at that trend. You can still go even further, maybe even 30 minutes time frame. Look at it, guys. This is a 30 minutes time frame. You can wait for this pattern to break out. You enter, right? Or you wait for price to pull back at this top here, right? And then you take your trade, right? You can go even further to smaller time frame, even the 15 minutes, because you already know what you are expecting. You already know what you have seen in the bigger time frame. So here in the smaller time frame, this is just some more information. Remember, this is the previous high here that price has not broken. So if price doesn't break through to the upside, then we still consider to be bearish. Remember, we are dealing with probabilities, right? So now you see this is the possibility of price moving and then moving down. So that's just as simple as that, guys. See, now we headed from the bigger time frame to smaller time frame, identifying our key zones. From here now, this will going to act as the first target, because at the main time that is our previous high. Now if you want to take a very good swing trade, for instance, this could be the second target. Now this second target is based on a resistance or a support zone that we draw in the bigger time frame. Just imagine, guys, cashing a trade here, right? As a swing trader, it doesn't matter if you're a swing trader, a day trader, whatever. Look at that, guys. These are hundreds of pips, and that could be a swing trade. So as a swing trader, you can still use it. It will work for you. As a day trader in a smaller time frame, you can still wait for a breakout here. You cash your move, you cash your hundreds of pips here, you exceed. You can see wait for price to pull, you enter here, you can see enter, and then you exit below there, right? I'm just showing you many ways in which you can take your trade. Once you have already done your analysis, you can enter and then you exit here, right? You can still wait for breakout, you enter, exit. If you're a swing trader, you go to a bigger time frame, you're still going to get the information, guys. That is how you can do a top-down analysis, going from the bigger time frame to the smaller time frame, plotting on all of your zones, identifying major zones that will help you identifying the trend of the market, identifying chart patterns, and all of that. So basically that's it, guys. Thank you so much for watching. So you might want to join our Telegram channel, so that sometimes you also get, because we are going to be posting some of this analysis in the group on the channel. So you want to join, check the link in the pinned comment and also in this video's description below. And if you're new to the channel, make sure you subscribe to the channel by hitting on the subscribe button and notification bell. Please don't forget to hit the like button if you like the video. See you in the next video.